About 3 months ago, I wrote a bullish article on PayPal stock, highlighting 8 reasons why I think it's a great idea to buy PayPal stock. And since that article, the stock ran up more than 20% from $64 a share to as high as $83 a share. So the stock seemed unstoppable at that point, but the rally came to a halt when the company posted mixed Q3 results a few days ago, sending shares lower the following day. So in today's video, I want to go through PayPal's Q3 results, what went wrong, what went right, and what's next for the company and what I intend to do with PayPal stock. As always, you can read the article version of this video, which I will leave the link in the description box below. And with that being said, let's jump straight into PayPal's Q3 results. So Q3 revenue came in at about $7.8 billion, which is up 6% year over year. And as you can see, revenue growth has been slowing down over the past few quarters, and correct me if I'm wrong, but this may be the lowest quarterly growth ever since the company went public. Not only that, but the company also missed expectations by $90 million, which might explain the post earnings sell off. So, right away, not a good start at all for PayPal's Q3 results. That being said, revenue growth for the quarter was driven by higher total payment volume or TPV, which was $423 billion in Q3, up by 9% year over year, which happens to be a record high for the company, as you can see right here. Breaking it down by segment, branded checkout, which is what PayPal is known for, grew by 6% year over year in Q3, which is relatively stable over the last few quarters. On the other hand, PSP or unbranded card processing grew only 11% year over year, which is a major slowdown from Q2's growth of 19% and also last year Q3's growth of 32% year over year. So that's a major slowdown right there. While this may look ugly, keep in mind that this was due to a change in pricing strategy, more specifically to a price to value strategy, as opposed to being the lowest cost provider in the payments processing industry. And that is why Braintree, which is a key component of the unbranded processing side of PayPal's business, continues to contribute to transaction margin dollar growth, which is good to see. So, in other words, PayPal is driving higher gross profit growth despite lower payment volume growth, implying better unit economics. And lastly, we have Venmo, which grew TPV by 8% year over year in Q3, which is relatively stable as well compared to past quarters. Taking a look at the company's engagement metrics, we can see that PayPal maintains strong engagement within its ecosystem. As you can see, active accounts, monthly active accounts, payment transactions, transactions per account, and transactions per account excluding PSP all grew year over year in Q3, as you can see by the bottom row right here. Most notably, PayPal added about 3 million active accounts quarter over quarter to 432 million in Q3 and has grown its user base for 3 straight quarters, which is just music to my ears. Monthly active accounts, which is a metric that measures how engaged the ecosystem is, also continues to grow up 2% year over year to 223 million in Q3. So really positive momentum in terms of user growth. And yes, we can see some noticeable slowdown in terms of the other metrics, but this was due to a change in pricing strategy, which I mentioned earlier. And keep in mind that this was intentional by management as they prioritize healthy, profitable growth rather than targeting a high proportion of processing volume at low or even negative margins. That being said, expect the slowdown to continue as management guides for low single digit growth in Q4, again, due to the impact from price to value strategy and prioritization of profitable growth. But on the bright side, management expects growth to reaccelerate at some point in the future. And that's because PayPal has announced a barrage of partnerships, including with Pfizer, Adyen, and Global Payments, Shopify, as well as Amazon Prime. And if you haven't noticed, these are fintech and e commerce giants with incredible scale and network. So these are actually PayPal's competition, but instead of undercutting them and hurting its bottom line in the process, management decided to partner up with them And I think it's very clever of management, as I think these partnerships will drive strong growth for PayPal for years to come. And what's more, PayPal is investing heavily on improving its branded checkout experience, including personalized mobile checkout, as well as new debit card programs for PayPal and Venmo accounts. That being said, I think PayPal is in great position to grow both its processing volume and ecosystem. So as a reminder, PayPal recorded 432 million active accounts in Q3, which is up only 1% year over year, but that is very close to the previous record of 435 million active accounts in Q4 of 2022, which is just 3 million active accounts shy. So, considering all these new partnerships and product developments, and the fact that Q4 is the holiday season, I think we might see active accounts reaching new all time highs next quarter, which I believe will be a huge catalyst for the stock. So, looking at profitability, gross profit or transaction margin dollar in PayPal's case was $3.7 billion in Q3, up by 8% year over year. And as you can see, PayPal's transaction margin dollar growth has been accelerating to its highest level in 3 years, as you can see. And this was due to higher interest income, tech led, loss improvements, branded checkout, Venmo, and Braintree. So here you can see PayPal's transaction margin, and it has been improving over the last few quarters, as you can see right here, which was 46.6% as of Q3, up by 120 basis points year over year and 80 basis points quarter over quarter. So despite the slowdown in TPV and revenue growth due to the change in pricing strategy, PayPal was able to deliver higher transaction margin dollar growth, which means improved unit economics per transaction, and that is what we like to see. And according to management, PayPal is still renegotiating its contracts with its merchant partners, which takes time to materialize. However, the good news is that management expects the contract renewals to be margin accretive in the next few years. So, in other words, expect transaction margins to continue to improve from here, which is very bullish in my opinion, as it displays PayPal's brand moat and pricing power. So, not only did transaction margin dollar improve, but PayPal also grew non GAAP operating profit by 18% in Q3, leading to a non GAAP operating margin of 18.8%, which expanded by 194 basis point year over year. So there's a clear sign of operating leverage here. As a result, non-GAAP earnings per share grew by 22% year over year in Q3 to $1.20, which beat analyst estimates by a wide margin, or 13 cents. While earnings per share growth has been really strong over the last few quarters, management expects a low to mid single digit decrease in non-GAAP EPS in Q4, mainly due to elevated marketing spend to support key initiatives and new products. While the earnings decline is not the best news for investors, given all the new products and partnerships PayPal has launched over the past few months, I think it's wise for management to be aggressive in their marketing and acquiring and engaging as many users as possible and burning into the minds of users that PayPal is the best payment solution out there. I think that's going to pay dividends in the long run in the form of higher engagement, in the form of higher account growth, in the form of better unit economics. And ultimately, I think this will drive robust volume growth and robust earnings growth for shareholders in the long term. So I'm not worried at all about the expected earnings decline in the short term. Turning to the balance sheet, PayPal's balance sheet remains solid with $16.2 billion of cash and investments. Total debt was $12.4 billion, bringing its net cash position at about $3.8 billion. The company also maintains strong cash flows, producing free cash flows of about $1.4 billion in Q3, representing a free cash flow margin of about 18%. And unsurprisingly, PayPal used all this FCF or free cash flow to buy back more shares during the quarter. So here you can see PayPal's share buyback activity, which was $1.8 billion in Q3. And correct me if I'm wrong, I think this is the highest level of share repurchases that PayPal has done in a single quarter ever. So that shows how undervalued management thinks about PayPal stock currently. So with record levels of share buybacks, PayPal's share count continues to shrink at a record pace, as you can see right here. And with lower shares outstanding, we can expect earnings per share and free cash flow per share to grow even more rapidly, which should also boost share price appreciation moving forward. As you can see, PayPal's trailing 12-month free cash flow per share is already at an all-time high. So as it goes higher and higher, I think the stock price will head higher as well, because in the long run, the stock follows free cash flow per share. So let's now look at valuation. As of today's video, PayPal trades at a PE ratio of about 18.9 times and a price to free cash flow ratio of 11.9 times, which, as you can see in this chart right here, both ratios are basically near their all-time lows. So this means that PayPal is still trading close to its lowest valuation multiple ever, even despite the recent rally that we've seen. So I think there's still value for investors today. So another way to look at it is that PayPal is currently trading at an earnings yield of 5.3% and a free cash flow yield of 8.4%, which is much higher than the bond yield of 4.3%, which means investors are better off putting their money into PayPal than in bonds. So as for me, I have a base case price target of about $106 a share for PayPal stock, representing a 1-year upside potential of 34%. So plenty of upside from here. And this assumes a revenue compounded annual growth rate of just 7%, a free cash flow margin of 19%, a perpetual growth rate of 2.5%, and discount rate of 10%. In the bear case, I only assume a 6% compounded annual growth rate and a 16.5% free cash flow margin and a perpetual growth rate of just 2%. And even then, I still expect some upside from here to about $84 a share. As for the bull case, I assume an 8% CAGR and a free cash flow margin of 21.5% with a perpetual growth rate of 3.0%, giving me a price target of $132 a share, which represents an upside potential of 67%. So whichever the case, I believe PayPal stock still has plenty of room to run, which is why I continue to hold PayPal stock. So all in all, despite mixed Q3 results, I think there's a lot to like about PayPal's recent earnings report. Even though the company missed revenue estimates with growth slowing down, keep in mind that this was due to a change in pricing strategy, not because of structural or product issues or competition. Besides, the company maintained strong transaction margin dollar growth, earnings per share growth, and free cash flow per share growth, which I think matter more for a maturing company like PayPal. In addition, the company is still buying back shares aggressively, and this should continue to lower share count, which should boost per share metrics. Valuation remains depressed as well, which is why I continue to hold PayPal stock. But above all, the company is on track to grow its ecosystem to new heights. In fact, it's only 3 million active accounts away from breaking its previous record of 435 million. And when it does break this record, which could happen as early as Q4, I think the markets will react very positively to the news. With that being said, thank you so much for watching my PayPal video. If you enjoyed this video, please leave a like, comment, and subscribe to my channel for more investment content like this. We're deep into earnings season, so be sure to follow me to get updates on the companies that I cover in this channel. As always, I appreciate you and I hope you have an amazing day. See you guys in the next video.